Good evening, guys. Can everyone hear me?
I hear you. Good
I
evening.
can hear you clearly.
All right, great. Good evening. Welcome again to another series on our theme, technical analysis. Yeah, so yesterday was an amazing session. We really went all out. Got to understand some of the basics, got to see some practical stuff, and unfortunately, because of how long the lecture took, we could not take questions yesterday. But yeah, we're going to give time for that right now. If you were at yesterday's class and you have any questions, you can just raise up your hand, or you can write them out in the chat box. Actually, I prefer you just type it out in the chat box. So I'll read out your questions. So we're going to give our time for that. And depending on how it goes, we'll start the lecture for today by in about 3 minutes. So yes, if you've got questions, please just put it in the chat box. Our speakers are here to answer your questions. Meanwhile, if you know anybody that is supposed to be here and isn't here, you can just tell them to join. The link will be on the community so that we can have more people go to this class. Thank you. All right, looks like we have no questions right for now. So I'm sure you will have more questions after the lecture. So let's get right into it. We'll be starting today's session right now, and you know what it is. We're talking about technical analysis, and it's one of the ways to make money in cryptocurrencies. And as our one of our speakers said it yesterday, Oluwa showed that you can actually build wealth if you understand this game very well. But you have to study, you have to put in the work. But then it's worth it. And they debunked a lot of would I say fads that exist in the technical analysis space. You begin to realize that technical analysts are very patient people, very analytical. We were playing around with charts yesterday, and it was very insightful. And I'm looking forward to making money with this new skill. And today we'll be deepening our knowledge in technical analysis. So to go first would be our speaker Babatunde Adeyemo. Yeah, so they can hear me.
Yeah, I can hear you. Good evening, guys.
All
I
right,
saw you
all
all
right. Good
enjoyed
evening. So please
yesterday.
just introduce yourself. Introduce
Yeah, I'm
yourself, and
Tunde
then you
Adeyemo.
can shoot.
All right, guys. So I'm Tunde Adeyemo, technical analyst. Um, we'll be talking about continuation of technical analysis today, and I've been trading for the past 4 years now, and it's been awesome. I do not do more than technical analysis. Yes, there's fundamental analysis, but I do not do more than technical analysis because I've been making money and making profits since I started technical analysis. So straight into today's class, or before today's class, let's do a recap of what we did yesterday. Yesterday we were able to establish that the market doesn't just move up, it moves in patterns, it moves in a zigzag, it moves in trends. And while we're discussing that, we defined what a trend is. We said a trend is the pattern in which market moves. And then we identified the three kinds of trends we have. We said we have the uptrend, the downtrend, and the consolidating trend. And then we identified how a beginner, how you can know what kind of trend you are in. We established the fact that if you do not see higher high and higher low, then the market is not in an uptrend. We also talked about the downtrend that you need to see lower lows and lower high to know that the market is in an uptrend. And we also talked about the ranging market, which means markets just keep bouncing and dancing around the same zone, keeps hitting the same support and resistance. So we said the best thing to do in an uptrend is to look for buys, and the best thing to do in a downtrend is to look for sales. And we told us where to get in on our buys and where to get in on our sales. And we also talked about how a support can turn to a resistance and how a resistance would also turn to a support. So today's class, we'll be talking about chart patterns. What are chart patterns? Chart patterns are patterns that the market creates sometimes and they happen most times. And when they happen, we know that the market is either going up or down. As a trader, when you see some chart patterns, you need to know what to do if it's to buy or sell. So for today, we'll be talking about few of the chart patterns. Trust me, there are a lot of chart patterns. There are more than 100. But for the purpose of this training and for the purpose of us being beginners, so we don't stress ourselves or just pack too many chart patterns in our heads, we'll be talking about just few, I think about six. So the first one will be um, the head and shoulder pattern. We have the head and shoulder pattern. We also have the inverse head and shoulder pattern. I'll be sharing my screen soon so I can show you guys what the head and shoulder pattern looks like and what inverse head and shoulder pattern also looks like. Also, we have the double top. We also have the double bottom. We also have triple top and triple bottom. And we also have the triangular pattern. Some people call it symmetric triangle. Whichever way it is, if you see some kind of triangle in the market, then you know what to expect. At the end of this class, you should know what to do when the market is creating whatever kind of pattern you see. Um, all right. So I'll be sharing my screen now. Coming. Yeah, I'm sure everyone can see my screen. All right. So
Yeah, I can see your screen.
these are chart patterns. Same thing. I'm using my phone, so we won't have excuse of saying we do not have a laptop. That's why we've not been trading or analyzing the market. Anybody can analyze the market. So far, you have a smartphone. Now, here you can see this is a double top. This is a double top. This is the head and shoulder pattern. We have the double bottom, inverse head and shoulder. We have falling wedge, rising wedge. All right, so let's go into the chart and do some analysis. Let's look at how these patterns form. All right, so for the head and shoulder pattern, you expect to see something like this. All right, so this right here is the head. Then this is the left shoulder, and this is the right shoulder. Whenever the market creates a head and shoulder pattern, trust me, the trend is about to change. If you are in an uptrend and you see the head and shoulder pattern, just know that we are about to begin a downtrend. As soon as the market creates the right shoulder, you expect to see the market start falling. You expect to see the market start falling. But as a conservative trader, you do not enter as soon as you see the right shoulder. You wait for the market to start falling and then break through the neckline. Where is the neckline? This is the neckline. This is the neck. This is the head. This is the left shoulder, and this is the right shoulder. So as soon as the market breaks the neckline, you can then wait for pullback. Remember yesterday we talked about pullback or retest. We said the market would always come back, retest your support or resistance. You would also agree with me that this right here is a support. This zone right here is a support. Let me draw it out so we can all see. So let's draw out. This is a support zone. This is a support zone. And this right here, this is the shoulder. The left and right shoulder, these are shoulders. And then this is the head. So as soon as market creates this pattern, what do you do? Or what do you expect? You expect that the market comes. You expect that the market comes down, break the neckline. As soon as it breaks the neckline, what do you wait for? Wait for it to retest the previous support. Now, as soon as you retest it, what do? You enter your sell and you can take profit somewhere here. Remember I said, whenever you see a head and shoulder pattern in an uptrend, you should know that the trend is about to change. The trend is about to change from uptrend to downtrend. As soon as you see head and shoulder, just know the trend is about to change from uptrend to downtrend. Now, the market was trending up. Market was trending up right from here. Market was trending up, and then when it got to this place, what did the market do? Market created a head and shoulder pattern. As soon as it creates the head and shoulder pattern, you just have to know that the trend is about to change, and then a downtrend will begin. So when you see the head and shoulder, wait for a break, retest, then you can start selling, take profits whenever you think it's okay for you, but never let the market change trends on you. Now that's for the head and shoulder pattern. That's for the head and shoulder pattern, and it's very clear. We're in an uptrend right here, and then market was about to change trend. It created the head, the shoulder, the left shoulder, the right shoulder pattern, and then it started falling. So that's a downtrend. This is the uptrend, head and shoulder pattern, then the downtrend. Now let's look at the opposite of this, which is the inverse head and shoulder. Inverse head and shoulder is the opposite of head and shoulder pattern. The inverse means you should be looking out for inverse head and shoulder in a downtrend. Now let's go again. Now let's assume the market was in a downtrend. Market has been falling. And when it gets to a particular place, or when the trend is about to change, you see something called inverse head and shoulder. So this is what an inverse head and shoulder looks like. Now the market has created an inverse head and shoulder here. Right here. This is the head. This is the left shoulder, and this is the right shoulder. This is just the opposite of head and shoulder. When you turn the head and shoulder upside down, you have inverse head and shoulder. So this is the head, left shoulder, and right shoulder. What do? You enter your sell at the break of the neckline. This is the neckline. You enter your buy rather. You enter your buy at the break of the neckline. This is the neckline. As soon as the market breaks the neckline, what do? As a conservative trader, you wait for retest. You wait for pullback. You do not just enter buy because the market has broken the neckline. You wait for pullback, and as soon as the market pulls back to the neckline region, you can then enter a buy. As soon as the market pulls back to this place, enter a buy, then market keeps moving up, 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 and up. Now that's for the inverse head and shoulder. Now we said you'd most time find the head and shoulder pattern when the uptrend is about to change to a downtrend, and you'd most times find the inverse head and shoulder when the downtrend is about to change to an uptrend. Now I'm not saying you cannot find the head and shoulder on a downtrend. You can find it. You can also find the inverse head and shoulder in an uptrend. But the best ones that would favor you, that will be good for you, is when you see the head and shoulder in an uptrend, then you can know that the market is about to change trend, then ride it till you are okay to take profit. Compared to when you see the head and shoulder on a downtrend. When you see the head and shoulder on a downtrend, it's your profit will be small compared to what you get when it's about to change trend. So now that's for head and shoulder pattern. The next pattern is double top and double bottom. What do we mean by double top and double bottom? I'm sure everyone can hear me, right?
Yes, we can.
All right. So for double top and double bottom, the market is creating what we call equal highs and equal lows. This is what we mean by double top. When the market is in an uptrend, and then instead of the market to create a new high, which is called higher high, the market hits the same previous high. Now we already have a double top. So what do? We wait for it to come down, form the M. It forms the M. As soon as it forms the M, wait for it to break the neckline. Remember, this is still the neckline. We have a double top already, but we wait for it to form the M shape, and as soon as it forms it, wait for it to break the neckline. As soon as it breaks the neckline, what do? We wait for a retest on the neckline. We wait for a retest on the neckline, and as soon as we get the retest, we do what? We sell.
Okay. You said
As soon as we retest the neckline, we sell. That's for double top. Where are the tops? This is top one. This is the first top. This is the first top right here, and this is the second top. When the market creates a double top, you wait for a break of the neckline, then retest, you enter your sell. That's for double top. Trust me, these patterns will help you, and you would most times see them. You would most times see them. If you're especially when you're looking for them, you see them. That's for double top. Now let's treat the double bottom. Double bottom is the opposite of double top. Market was moving in a downtrend. Instead of market to create a new low, what did the market do? Market hit the same previous low. So as soon as market hits the same previous low, then you look out for the break. We already have a double bottom here. As soon as you have a double bottom, you wait for the break of the neckline. Wait for the break of the neckline. As soon as market breaks the neckline, you wait for the retest of the same neckline, then you can buy. Now we've established that when you see head and shoulder, you should look for sells at the neckline. When you see the inverse head and shoulder, you should look for buys at the neckline. When you see the double top, you should look for sells at the neckline. When you see the inverse, when you see the double bottom rather, you should look for buys. Now let's go practical. Let's go into the chart and see if we can find one or two. All right, so this is BNB chart. Yesterday we used BTC and today we are using BNB. BNB is Binance coin. So now just opening this chart now, I think I'm seeing like two inverse head and shoulder already. I'm seeing like two inverse head and shoulder already. Now the first one is right here. Right here. This is my left shoulder. This is the head, and then this is the right shoulder. Now, what did the market do? Look at it closely. We have the head here, left shoulder, and the right shoulder. The market did what? It broke the neckline. This is the neckline. As soon as market broke the neckline, what happened? We had a retest on the neckline. As soon as the retest happened, what the market do? Market bought. Market went up so high. You can see market went up so high. This is the head, left shoulder, right shoulder, a break of the neck, and then a retest. Can we all see that? Just type yes if you can see that. This is the head, left shoulder, right shoulder, a break of the neckline, and then a retest. After the retest, what are you supposed to do? You're supposed to enter a buy. And as soon as you enter your buy, market keeps buying, 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 and you can take profit anywhere you like, anywhere you want, right? Now that's for inverse head and shoulder. Let's look for um let's look for head and shoulder, normal head and shoulder. All right, you'd agree with me. We have a shoulder. We have shoulders right here. Now this is the head. You'd agree with me. This is the head, left shoulder, right shoulder, neckline, and a break of it. As soon as we have a break of the neckline, what happened? Market came back, we tested it, then sold off. Now remember, I said the best time to look for head and shoulder is when the market is in an uptrend. Now you see that this market was in a downtrend, and we had head and shoulder. Remember, I stated it that you would find almost all the patterns in all kinds of trends. But the best one that would make you more profit is when you find the head and shoulder in an uptrend. Then you know the trend is about to change. Now this is head and shoulder, but in what kind of trend? In a downtrend. Market was trending down. That's why you can see that the profit you'd have made on this would not be as much as what you'd have made on a normal head and shoulder. You can see the profit is so low. The market moved from the neck region here, then moved here. I started buying again. Right? So that's for the double, that's for the head and shoulder. Let's look if we can see more. All right, so right here, the market is creating something. Remember, we were in a downtrend. This is a downtrend right here. BNB was selling for a while. This is a downtrend. From here to this point has been a downtrend. And what did the market do? Market created the inverse head and shoulder. This is the inverse head and shoulder. This is the head right here. This is the left shoulder, right shoulder. And then we have a break of the neckline already. So what are we waiting for? We are looking for buys. So technical analysts will be looking to buy around this zone. This is our head. The technical analyst will be looking to buy around this zone. Right? We'll be looking to buy around this zone because we know the trend is changing already. I can also see a mini inverse head and shoulder that happened already, and the trend is moving already. This is the mini inverse head and shoulder. This is the mini inverse head and shoulder. This is the head right here, left shoulder, right shoulder. Market broke it. We had a retest, and market has been trending up right from there. Now that's for inverse head and shoulder. The next one is double top and double bottom. Double top and double bottom. Let's look for a double top. This right here was supposed to be a double top, but we had 1, 2, 3. We have like 4. So we won't call that a double top. Let's look for a more stable double top. All right, here is a double top. When the market makes an high and then comes back to hit the same high, we call it double top. This is a double top right here. This is a double top. Remember, we said the double top also have the neckline. This is the neckline here. This is the neckline here. This is the neckline. Now, what happened? When the market created the double top, top 1, top 2, what happened? Market broke the neckline, which is right here. Market broke the neckline, and then we had a retest of that neckline, and market did what? Market started selling. You can see how long market sold. We were in an uptrend. Market created a double top, and we had huge sales. Huge sales. That's for double top. Now let's go look for double bottom. Double bottom. Let's check other charts. Enough of BNB. Let's check. Let's see Gala. Okay, this is Gala, and you can tell market is in a downtrend. Do we have any double bottom? No. No. Let's check stand. This is Sun. Market was in a downtrend. It broke the downtrend. We started an uptrend. It broke the uptrend again. The downtrend. All right, I can't find a double bottom here. Maybe when my partner comes up, he would look for or show you more examples on chart patterns. So we have some other chart patterns like symmetric triangle. Now the market would always skew within triangles. All right, so let's check BTC chart. Let's see if we have any triangle. All right, so first let's explain what the triangle is. When the market is about to create a chart pattern called triangle or symmetric triangle, you would see something like this. Market would move this way. Now this is what we mean by symmetric triangle. Market is moving within the triangle range, and what do you expect? You expect the market to skew out. You can see the market keeps hitting the same high, and then we are having the higher low, higher low. This is the first low, higher low, higher low. The market keeps making higher lows until it breaks out of the triangle. Now you need to understand that the market can break out of the triangle from either side. It can break out from the upside or the downside. As a trader, what you need to wait for is the breakout. As soon as it breaks out, either the upside or the downside, just wait for a retest of that same triangle and then buy or sell. Now let's assume the market broke out of the triangle from the upside, and you expect to see something like this. A retest, then you can enter your buy, then market keeps going up, up and up. Now what if the market breaks out on the downside? What do you expect? You expect to see something like this. As soon as you get a retest, enter your sell and enjoy the trend. Now that's for chart patterns that we'll be treating tonight. So we treated the head and shoulder pattern, inverse head and shoulder, double top, double bottom, and then symmetric triangle. Triangle can come in any form. It can come in any form. Let's see another form it can come in. This is a triangle. Now this is a triangle right here. A triangle can come in any form. This is a triangle, and what do you expect? You expect to see the market move like this in the triangle. Market makes move like this. What do you do? Just wait for a breakout of the triangle, then retest the zone. As soon as market retests the zone, then you enter your sales, right? So that will be all on chart patterns tonight. When my partner comes up, it will show us more examples, more practical examples on chart patterns. It will show us live on chart so we can all see. Hello, Sunbase, are you there?
Yes, I am. Can you hear me well?
Yeah, thank you so much today. So before Sundays goes on, guys, do you have any questions? If you have a question, just signify in the chat box. We'll give that a minute. All right, looks like we don't have any questions. So yeah, thank you so much, Tunde, for the session. Really insightful. Yeah, Sundays, you can come up.
All right, good evening, guys. My name is Oluwaseun Lawal. I'm a technical analyst too, and I'll be. Please mute your mic. Please mute your mic if you are not talking. Yeah, thank you. Okay, so I'll be talking about candlestick patterns tonight. Let me quickly share my screen so that we can have an interactive session. Okay. So I believe you can see my screen now. Please signify if you can see my
Yes, we
screen.
can see your screen. We can see your screen.
Okay, great. Thank you. So yesterday I was talking to us about candlesticks generally and what they are all about. So um, I'm going to be showing us tonight all the. Sorry, I stopped sharing. Let me get back to that again. Sorry for that. Let me just share it again. Okay, so I believe you can see it again. Yeah. So first we are going to be talking about the candlesticks. I would say the composition of a candlestick and how they actually work. What is a candlestick in itself? So as you can see on my screen, we have green and the red candlestick. So most people refer to the green candlestick as the bullish candlestick, which is a candlestick that shows that the market is going up. So the market is actually going up when you see a green candlestick. And then for the red, it is a bearish candlestick, which shows that the market is going down. So, but then there is a kind of bias about the colors. You can always customize the colors of your candles to suit whatever you want. I can decide that my bullish candle, which is the green one, will be yellow, and my bearish candle will be black. So that one depends on you. But generally, when you open most trading platforms, most charts, We always see the green and red, they are the default colors. So how do candlesticks form actually? The component of a candlestick, as you can see on my screen here, we have the low here, we have the open, we have the close, and we have the high. So how do this actually come to being? So when remember yesterday I told us that each of these candles represents a time frame. Let's assume that this particular green candle is a day. It represents 1 day time frame. So immediately 1 day finishes and the next candlestick is about to form, and then price starts here. That particular place that price starts at will be the open price. It will be the beginning of the body for the day. It will be the open price. And that is why we have the open here. Then after 24 hours, when the day closes, wherever the price closes, that is where we have the close here. The difference between the open and the close is what we call the body. The all shaded part here is what we call the body. So how do we now have these extensions, these wicks or shadows? People call it wicks, some other people call it shadow. During the day, when this market opened, the price could have gone up, then at some point maybe sellers were able to push it down, and then it will form a wick, and then maybe during the day again, people pushed it so far up, buyers pushed it so far up here, but then at the end of 24 hours, it's closed here. So that is how candlestick form. So what actually determines if a candlestick will be bullish will be that if you open at 10 naira here, you have to close above 10 naira. That makes it a bullish candlestick. But the reverse is the case for a bearish candlestick because the price opened up here and closed here, which means price closed lower than it opened. And that is why the bearish candlestick formed. So because of our time, I'm going to show this live. When I'm done with the presentation, I'm going to show you guys this one live on the chart. You will see yourself how the candles are formed so that you can gain an understanding of the forces, the buying force and the selling force, the interplay between both forces. So you're going to see that happen on a live chart. So then we have the engulfing pattern. We have different kind of candlestick patterns. And patterns give a kind of confirmation as to whether to sell or to buy. If I remember clearly, today was talking about chart patterns. When you are dealing with chart patterns, you actually need candlestick patterns to verify whether you should enter trades or not. So that is where candlestick pattern comes in. So the first one we'll be talking about tonight are actually our engulfing patterns. So what is an engulfing pattern? We actually have the two types of engulfing pattern. We have bullish engulfing and bearish engulfing. Like you can see on my screen, this is the bullish engulfing pattern. This is the bearish engulfing pattern. So when you have a market, when you have a green candle that is covering the whole body of a red candle, a bullish candle is covering the whole body of a red candle. It's actually longer than the body of a red candle, then it is a bullish. That shows you that at some point the sellers were in control, but now the buyers have been able to overpower them.
Oh, sorry.
Hello.
Excuse me, Achiom, please.
Just saying only one slide.
Slide number 1.
Are you talking to me? I can't hear you.
Yeah, I am Sunday. You've been on one single slide for a while now.
You can't see my slides.
Like we can only see the first slide. We can't see the other slides you've been talking on.
Oh, really? Wow.
As you're progressing, we're not seeing the progression from the
Let
slides.
me try and share it again then.
All right, no problem. Thank you.
So can you see it now? Are you seeing it now?
No, no, we can't see anything.
No, we can't see your screen.
Wow, I don't know why that is happening. Okay, this thing is telling me that there is an error with screen sharing. Wow, that's something. Even now,
You can actually send it to Ijola or someone. Let them, what's it called? They can be sharing the screen for you on their behalf, and they'll just be
okay,
proceeding for you in case
let
that
me
works.
do that. I don't know why I can't.
Yeah, that works.
Let me see why I can't do that. Let me just send it to them then. I was moving it and I thought it was moving. I could see it from my end here, but where did I save this thing? Excuse me. I'm sorry for that. I don't know why I can't share. Okay, I'm sending it now to the group picture, so you can just share from your end, and I'll just keep talking. So please share now. Have you seen it, Ija?
Yeah, I have.
Yeah, please share. Let me continue. Go to the third slide.
Just give me a moment, please.
So it will be a problem if I can't share my screen because I have to go to the live chat. Let me leave the
No,
meeting
certainly,
now.
just give me a minute or so.
I'll leave the meeting and rejoin.
Oh, okay, no problem. I'll get this set up in a bit. I'm sorry, are you back on?
Can you guys hear me?
Yes, loud and clear. So I'm going to share my screen right now. So just a minute.
Can you hear me? I can't hear anybody.
I can hear you. Can you guys see the screen now?
Yes, you can see the screen.
Yes, I can see the
Great.
screen.
Yes, on this, we are good to go. I'll just tell me where to go to the next slide or not.
Okay, Ija, if you can hear me, just go to the next slide. Okay, great. So
I'm in the next slide.
I'm very sorry for the noise. I'm kind of in a public place. I couldn't get to um, a more quiet place. So, like I was saying earlier, the problem now is I can't move my. Ija, can you stop sharing? Let me. I think the problem has been fixed from my end. Let me try and share again from here. Okay, so I suppose you guys can see now.
Oh yes, we can.
So let me
Maybe make it
just
a
continue.
slideshow so that you can just be moving with the arrows.
Okay, so like I was saying earlier before the interruption, this right here is the bullish engulfing, and this right here is the bearish engulfing. So bullish engulfing shows you that the market is about to change direction, especially in a downtrend. When the market is going on a downtrend for a while and all of a sudden you can see this in a structure, you can see the bullish engulfing in the structure, that tells you that the market is about to go the other way, which is up. So then the opposite is the case for the bearish engulfing. You usually see it when an uptrend is about to reverse. Then you see this particular setup. You see the green, the short green one, and then the red one that totally engulfs the green one. So when you see that, especially when it forms at the structure, when I say structure, I mean the support, and in this case for the bearish, the resistance. So when you see that the resistance, that shows you that the market is about to go the other way. So let me quickly run through the other major ones before we now go to the live chat and we see what is happening. So here we have the doji patterns. So there are actually four types of doji patterns. We have the doji, the normal one, which is almost like a plus. In most cases, you will see it looks like a plus sign. Then we have the dragonfly doji that looks like letter T.
Next slide, next slide.
Letter T. So then we have the gravestone doji, and then we have the long leg doji. So all of them have instances where, can you see the doji screen?
We can't see the slide.
I can see the slide. I'm seeing engulfing candlestick pattern. You don't know where you are.
That's not where it is.
Looks like the slides are moving again. But you're still on the third slide.
The slide cannot move again. We are supposed to be on the before part of this.
It's supposed to be on the fourth slide.
Yeah, we
Yeah,
can
we
see it
can
now.
see now. We can see it
So
now.
it seems you guys can see
Yes.
what I'm doing here. I don't know what's happening tonight, but I'm on the next screen. Let me try to stop and start again. So what about now? What about now?
You can
You
see
can
the
see the
slide.
slide.
I can't seem to hear anybody. Let me leave the meeting and join again. I don't know what's going on.
I don't know Everything is too small. I don't know.
Please mute your mics. There's the background noise. Atobasa, can you please mute your mic?
Oh, I'm sorry.
So I'm back, Ija. So please share from your end. Okay, great. So thank you very much. So let me pick it up from here. So as I was saying, we have the four kinds of doji. We have the doji that looks like a plus. We have the dragonfly doji that looks like a T. The gravestone that looks like a gravestone actually, and then the long leg. So what are all these doji? What do they represent? When you see doji in the market, it actually shows that there is an indecision in the market. What do I mean by indecision? That means people can't decide whether to buy or to sell. People can't decide whether to buy or to sell. There is equal struggle between buyers and sellers. That is when you always see doji in the market. So now it depends on where you see the doji that now determines what you're going to do at every point in time. So, and then when you see doji at structures, it actually tells a lot. For example, now if you see a dragonfly doji at the bottom of a downtrend, what that tells you immediately is that the people who are pushing the market down, which are the who are the sellers actually, they are tired, and then the buyers are having more power, they are gaining more traction. And if it now happens that this exactly this happens at a structure, that shows you that the market is about to turn, is about to change direction. So at that point in time, you need to position yourself to get along with the trend, with the new trend that is about to form. And the same is for gravestone gauges, except that that one happens at the end of an uptrend. So when you see a gravestone gauge at the end of an uptrend, that tells you that the uptrend is getting weaker and then there is about to be a reversal. So, but for the long leg is more or less like a neutral doji, just like the original doji. When you see that, it means there's so much pressure between the buyers and the sellers, and their powers, their forces are equally matched. So the market might not be going anywhere anytime soon. So when this one happens, you don't jump into the market. This is the time that you might want to take a step back and wait for confirmations. So we're going to get there when I go to the live chat. Then Ija, to the next. Then finally, for the sake of this class, there are a lot of candlestick patterns actually. We have Aramis, we have the morning stars, evening stars. But for the sake of this class, I just talked to four major ones. Four major ones because at the end of the day, you may not trade, you actually won't trade most of these um, candlestick patterns. I know of a particular person that just trades the engulfing and is making a lot of money from this. He doesn't care about the AMA, he doesn't care about doji. What he's looking out for is an engulfing pattern, either bearish or bullish. And when those things, when he sees them at structures that satisfy his own condition, he just enters his trade and it goes his way. So that is one of the reasons I decided not to go in too deep with all these patterns. So now you can see that we have on the right side, left side here, we have the hammer and the hanging man, and they actually look the same. But what is the difference? The hammer, like I said, they look similar, but the hammer pattern, which is the green one, is a sign of a reversal upward. That means we are already having, let's say we're having a downtrend, and all of a sudden you see an hammer. And what forms an hammer is that the lower wick or shadow is usually 2 to 3 times longer than the body. So when you see that at the bottom of a downtrend, you know that the market is about to change and go upwards. So it is usually at the bottom of a downtrend. So when you see that, know that that is an hammer. But for the hanging man, it actually forms when the market is about to go down. And that is usually at the end of a strong uptrend. The market might have gone up for days, months. All of a sudden, when you see an hanging man, that red candle, with long wick staying at the top, maybe at a resistance, then it tells you that the market is about to go down. Then you have to brace yourself. If you're in a position, it's the time to get out. If you're looking to enter a position, it's about time for you to position yourself to get into those trades. So on our right side, we have the inverted hammer and the shooting star. So what both of them do, they actually do the opposite of what these other two guys do at the other side. So why the hammer will be at the bottom of a downtrend, the inverted hammer will actually be at the top of an uptrend. Or in some cases, yeah, in some cases you might see it at the bottom of a downtrend too. But you can also see them at the top of an uptrend. When you see a hammer, a green candle which is standing upside down, then you know that the market is about to change trend. And then the shooting star is usually, excuse me. So sorry for that, excuse me. So the shooting star will be at the end of a strong uptrend. At the end of a strong uptrend, when the market keeps going up and up and up and up, and then you see a shooting star, the upper wick is longer than the body and it is hanging up, then you know that it is time for you to brace yourself for a downtrend. So I don't know, since I can't share my screen, we need to go and check the live chat now. Ija, you can stop sharing. Let me see if it will work from my end. I need to show you one or two things on the chat. I hope it works because that's the only thing that I'll need this. So please tell me if you can see my screen.
Okay.
So you can see my chat, Abby.
I can't see anything. Anybody else can see something? I'm using two screens, so I can't see anything of sharing.
Yeah.
I can't say anything. I can't say anything.
I can't see anything either.
I don't know why that is. Let me switch to my phone. Let me switch to my phone. Give me a moment. Let me switch to my phone.
Just so you know, we can't hear what you're saying because you're speaking.
I've not started speaking.
Oh, okay. I just wanted to point that out. Thank you.
So what about this screen now?
Yeah, we can see your phone screen. Maybe just rotate it to portrait mode.
So this is a B2C chart. Let me put it in landscape. Okay, so when I started, I was telling you about how charts, how the candlestick patterns are formed. So I'm going to go to the 1 minute time frame now and then show you the movement. You'll be able to see how everything forms. So right now we are on the 1 minute time frame. You'll be able to see the changes if you look very close at this. So I guess the market is slow tonight. You would have been seeing the candle flickering up and down. So if we stay for another minute, can you see the movement? So that means buyers are actually pushing this price up. As you can see that we have a blue, forming. It's growing. So which means buyers are actually taking control of the market. I wish it would just come down a bit so that you can see how wicks are formed too, but um, tonight is just I since I can't share from my system, it's going to be a little bit difficult to show you guys that. Okay, you can see the second one forming too, showing a red candle. Then it points straight up, but for the place where the price touched,
Can you
you
increase
can
your
see the
volume? Sorry, some
Sorry,
base.
some base.
Your volume is really low. I cannot hear you very well. It's very faint.
Let me connect to my phone. Okay, finally. Yeah, so if you check the 1 minute time frame, you'll be able to see some of these moves, and you can see the wicks forming too. So the wick forms everywhere the price touches during the movement of the market. So um, let me just go straight to showing you different kind of candles because I think I've wasted enough time dealing with all these unexpected events tonight. So I'm going to go to the 1 hour time frame. 1 hour time frame. Okay, so the first one I talked about the is the bullish engulfing, right? Okay, so let me see if I can get a bullish engulfing candle here and what happens after that. Okay, so I think we have one here. So let me highlight it. Okay, I think there has been an update in TradingView, the mobile app. It's not what I'm used to. I'm looking for one or two tools here. I can't find it. So I'm used to the system. Okay, um, I'll find my tools here. I don't know why. I don't know what. Okay, I think I'm just going to find a way to. I don't know, Tunde, can you show them from your end why did you go this out? Are you on the call? Tunde, are you on the call? Okay, since Tunde is not on the call, I may just.
He's on the call. He's presenting.
Is it? Can you hear me? Tunde, are you there? Okay, let me just. What I'll do now is just try and show
Yeah, I
you.
can hear you, and I'm trying to share my screen. I'm sure everyone can see
Uh,
my screen.
okay, let me stop sharing. Let me stop sharing. So it was supposed to be on my system. I don't know why it is retrieving. I really use this app. Okay.
All right. So, what tool are you trying to look for?
I want to show them bullish engulfing, bearish engulfing, all these candlestick patterns I talked
Okay.
about tonight.
Directly from TradingView.
Yes. So I need to be able to use the tool so that I can highlight the see the area I'm talking about. But apparently I can't see the tools here. I can't see the tools here.
All right. Is this what you're trying to show? Hello. Are you there?
Yes. Zoom in into a bearish engulfing first. Let's start from there.
Bearish engulfing. Yeah.
Okay, that's great. So can you kind of use a box to highlight it, to select it so that they can see what I'm talking about?
Okay.
Okay, so I hope everybody can see that those two candles that were highlighted, you can see the green one, it has a very small body, and then the red one next to it engulfs the whole green candle. And then what do we have after that? A downtrend. So that is a bearish engulfing. And then one thing you have to take note of when you're dealing with engulfing patterns is that you can't just trade them at any point on the chart. They occur everywhere on the chart. So it has to be at a structure. In this case, a resistance. It has to be at a resistance. Then when you have it at a resistance, then you can have confirmation. If it draws line on this particular chart, you will see that it is at a resistance. I can see it right from here. So immediately you see that at a resistance, and then you've had your order confirmation, then you can always go for a sell. You can always go for a sell. So then can you show us a bullish engulfing? So because of our time, I don't think we'll be able to cover everything, because there is still one thing I need to explain before we round off. Please mute your mics. Please mute your mics. So right here we have the one highlighted is a bullish engulfing. It is a bullish engulfing. As you can see, there is a small red candle and then a big red candle engulfing. Then there was a range for a while trying to retest the imbalance created by that green candle. Then subsequently went up. It went up from there. And then as you can see that there are lines drawn out around that area, which shows that it is at a structure, which is a support, which is a support. So I guess some of you would have wondered that, okay, we are talking about buying, we are talking about selling. So let me explain something right now. I think I kind of missed that yesterday so that the newbies here won't be confused. There are two types of trading when it comes to, there are actually more than two, but the broad ones you would have heard about, or that is common to most people, will be the sports trading and futures trading. Shitu, please mute your mic. Shitu, please mute your mic. So we have the sports trading and futures trading. So sports trading is a kind of trading that comes without leverage. You trade only what you have. If you have $100 now, you can afford to buy BNB $100. That is what you have. And unless BNB actually moves upward, you can't make profits. It's a one-way traffic. You can only buy, the only way to make money is when you buy low and sell high. So that is usually without much risk because you can't lose the actual value of cryptocurrency you bought. You can't lose the actual value of cryptocurrency you bought. So if you're using technical analysis to analyze such markets, I mean, in the sports trading space, what you basically do is look for area where you can buy low. You buy the dip. You're basically hunting for the dip. You don't have any business with bearish engulfing unless you're trying to sell off. So what you're looking at is that when is the best time for me to buy? Is this dip deep enough to buy, or is the dip going to continue? So you are only buying low to sell high. You can't make it if the market keeps going down. So then comes the second, which is futures trading. In futures, you can make money here with whether the market goes up or goes down. You can make profits. And then in this, and then you feel that okay, I'm very sure and very sure of this setup. You can borrow up to 100 times. Even Binance gives you up to 5x.
Hi, zombies. We can no longer hear you in case you're speaking. Meanwhile, guys, before zombies joins us again, does anybody have any question? Let me know if you have a question. You can just signify in the chat box. I'll be able to look out for your question.
Hello, please, I'm very sorry. The question I want to ask is that, please, is there any way we can get an ebook for this tutor, please?
Sure, sure. We'll share all the materials, unnecessary materials, in the several communities and honor the contracts. You either get that tonight or tomorrow morning. And I mean, even after now, you can still follow up with more questions in the community regarding this session.
Thanks.
Welcome, zombies. I see that you're here now.
Yes. I don't know. I didn't know now or the class is over already. Are you there?
Yeah, we can hear you. Please continue.
So what was the last thing you heard me say? Okay, there is a question. I think somebody was asking about, I saw a question on the chat now. You don't
Oh
care
yeah.
what support and
Please,
resistance
I
have to
believe.
do with engulfing pattern. I don't know, should we answer that now or later?
Let's chill to the end of the session. We'll deal with that at the end of the session. So don't drop your questions so that at the end of the session we'll answer all. Thank you.
So that I can know where to pick it up from. What was the last thing you heard me say before I left the call? So that I can know where to pick it up from. Can you hear me?
Yes, sir. You explained about
Okay,
equities on future trading.
okay, yeah. So I was making an illustration that on futures, you can actually, as much as you can make fast profits, you can actually lose all your capital very fast. So I was giving an example that let's say you're trading with 1,000 naira and then the market goes against you 10%. That means you're going to lose 100 naira because 10% of 1,000 is 100 naira. You still have 900 to trade. But assuming you're now using 1,000 naira,
Oh,
1,600
please,
naira, 1,000 naira, which
sir,
is
I can't hear
which
the network is breaking. Please, come again.
you can't what?
Come again. I can't really hear you, sir. The network is breaking from your end, sir. Please, come again.
Is that the same for everybody? Is that the same for everybody? Can anyone hear me?
We can hear you. All right, guys. So you need to know that in trading, what we do is conference. All you've learned, you need to put them together to have a better result, to have a very good result. You do not just enter a buy because you're on support. And you do not just enter a buy because you're on trend line support. I'm sure everyone can hear me, right? If you can hear me, please type yes. You do not just do anything because
Yep.
you do not just enter a buy because you are in an uptrend. Now you need to put so many things together. You need to look out for your support. You need to look out for the trend. You also need to look out for the candlestick confirmation. When we're learning these things, we're learning them separately. We talked about trends separately. We talked about support and resistance separately. We talked about chart patterns separately, and we also talked about candlestick separately. And the first thing you need to do as soon as you enter the market when you're about to analyze it, identify your trend. The second thing is know where your support and resistance is, map them out or draw them out. And the third thing you need to do is look for what to do. Do you want to enter a buy or a sell? Now, most likely you are always looking for buy because you'll be doing the spot trading. So when you want to enter your buy, you need to enter with your candlestick confirmation. That you are on a support does not mean if you enter a buy, the market would also buy. It's only your candlestick confirmation that would actually tell you that the market is about to move up. So we call these things confluence. That is addition of more than one or two indicators so you can have a better result. All right, so guys, that's all on technical analysis, and I'm sure you guys enjoyed it.
All right, thank you guys so much. Does anyone have any other question?
I have question
While we're
really.
waiting for question, you need to know one thing. Trading is something you have to do continuously. You need to keep doing it every time. That you learned it in 2 days doesn't mean you've known it all. You need to keep practicing, and also work on your psychology. Materials will be shared on this technical analysis class that we had, and the material I'll be watching out for, and I want every one of you to actually work on is the psychology material. Yes, you need to be very, very conversant with psychology because it will help you. Trading teach you to be patient. You need to be patient. You don't just enter the market because you want to make money. You enter the market when the time is right. So psychology teaches you all this, and you'd be fine. You'd make a lot of money in trading. If you have any question, you can type them in the message so we can answer them. And if not, you can ask later. We'll answer them.
Yeah, we'll be sending in the materials by tomorrow morning or this night, but latest by tomorrow morning. Latest by tomorrow morning. The materials used for the course, the presentation, the books, and some of the ebooks and other material links, they'll be sent to the community. If you do not join the community, I would send a link now in the chat box. Please join via that link. can also message me on WhatsApp. Just going to make this a single text so that you can also copy the number and then put it in your dial pad. So guys, thank you so much for staying with us on for the call on the call. It was longer than intended because of all the technical issues. But yeah, thank you so much. We hope you've learned. So yeah, feel free to message me on WhatsApp. We'll add you to the community. You can message the group admins, and in case you're confused, we can link you up with the speakers and the instructors. And sure, we're just here to make sure that you're able to make money. So guys, thank you so much. Have a good night. This session was sponsored by Coins and Cash. And we have another session coming up on decentralized finance, which is also connected to the cryptocurrency industry. So, if you think this one was really good, I'm very sure you will enjoy the next one. We'll also be having some juggernauts in the space to speak about it. So, yeah, guys, thanks again. If you have any questions, hit us up on the community, hit me up on WhatsApp. I'll direct your questions to the speakers and I'll get you an answer. So I will just give this a minute so everybody can get the contact I just shared in the chat box. And in 1 minute we'll end the call. Thank you. Alright guys, since there are no other questions and I assume everybody has gotten my contact, so you can reach out to me on WhatsApp. I'll reply you ASAP. If you have any other questions for clarification, I might reply you as well. So thank you very much for the call, and we hope to see you in our next session. Have a good night, everyone.